Hi everyone and welcome to my weekly update with me, which is Perry Market Analyst at Hantec Markets. Each week I take you through the key events I believe will be driving your investments in the coming days. Now this week it's a shortened trading week, it's Thanksgiving, and markets will be fairly cautious given the fact that we've got tax reform still being the big driver of the markets. And what we have got at the moment is a massively flattening yield curve in the States. It's now down at 61, 62 basis points between the 2-10 spread, and that is a big reflection of the fact that the longer end of the curve in the States is coming lower. We've got the fact that the 10-year Treasury yield, for example, is being sort of pulled back to a certain extent by concerns about tax reform. How are the Republicans going to get this one over the line? Are they going to get it through in 2017? Is it going to be watered down to the extent at which it doesn't? Basically nothing really going forward for growth. Already the market certainly seems to think that growth expectations in the longer term are not going to be all that great from this tax reform deal, but certainly this is a key fundamental factor as to why the yield curve has been flattening so much recently, and it's been driving a bit of a shift in market sentiment as well. We're seeing safe haven flows coming out of this. Gold is performing better, the yen is performing better. As I said, the longer end treasury market is performing better as well, pulling the yields lower. So this is really reflective of how the market is perceiving this risk sentiment at the moment. Equity markets deemed to be fully valued. We're seeing them starting to pull lower, just basically through earnings season, so subsequently we're seeing a bit of profit taking. And we're also seeing the euro, which is starting to drive higher. Now let me show you how the Forex markets are reacting at the moment. We've seen the euro pulling higher. Now there is, on Monday this week, there is a key factor of the German coalition discussions which have broken down. That's affected the euro, but it seems as though that already the markets are settling down from that. A little bit of volatility still to iron out, but certainly at the moment it looks as though the market is fairly settled on this one, and the euro is sort of riding that wave fairly well. Now, other than that, the euro has been performing much better, fundamentally stronger. You've got inflation that was revised higher. That helped support the euro, and general fundamentals are euro supportive as well, going medium to longer term. It's such like the current account surplus and the balance of payments becoming positive as well. So all helping to support the euro. Interesting that we've seen sterling, which is starting to find a bit of support as well, pulling higher in the last sort of week or so. It is still stuck in a trading range, and that trading range is between 130.25 towards 133.35. But at the beginning of this week, there's a suggestion that perhaps a little bit of a thawing within the Conservative government over the fact that the Brexit bill, they may be ready to increase their offer for sort of pushing through the trade talks. And that will be an interesting one as to how the markets sort of deem that, because we could see a breakout through the upside of this trading range if that is perceived to be a positive to sort of pushing ahead through to trade talks, which is all important for Brexit negotiations. Now, in terms of the dollar yen tracks the 10-year Treasury yield fairly closely, and what we have seen is 10-year Treasury yield falling down, and we've seen the dollar yen falling away as well. Again, a safe haven impetus there in that trade. Seen a breakdown, and it's sort of certain targets around 11.55, 11.50 area, which is a key medium to longer term support on dollar yen. So what we have got is equity markets which are also under pressure. A little bit of sort of chopping and changing early doors on Monday, but certainly I think that the at the back end of last week we had a couple of trading sessions for Wall Street which were lower. Big spike higher, yes, but again a bit of a net downside move on Wall Street, and that has certainly impacted on European sessions as well. And what we could see is, well, we've got Thanksgiving this week, so maybe that could produce a little bit of sort of quiet trading towards the end of the week. But as we move into December, we could see some volatility picking up once more. In terms of your commodity markets, we are seeing the gold price, which is pulling higher. Again, a safe haven bid through gold as the sort of risk appetite is started to fall away on the Treasury, and the yield and the tax reform moves. So we're seeing gold breaking out through 1290. Is this going to challenge that 1300 to 1310 key long-term pivot? That's the question this week. In terms of the oil markets, they had been a bit of corrective move in the last week or so, started to find a bit of support again above that 55.25 old breakout on WTI, and above the 60 to 61 support on Brent crude, so key levels there. Now, in terms of your data through this week, not a huge amount to really excite markets. We've got the durable goods orders, we've got the Fed meeting minutes, neither of which are expected to do a great deal. And I think that given the fact that we've got Thanksgiving at the end of the week, could be a bit of a sort of a dwindling interest through this week. But I think we could ramp up as we get into December next week. So with that in mind, I wish you good luck in your trading, and I will speak to you next time. Thank you.